In this video, we are going to be analyzing AI. So it is down about 1.5 points today. Now you can see what are these green and red levels that we've already provided. So these are key levels that we'll be paying attention to because this is what the options are pricing in for the week. We can see they're pricing in about a $1.40 move. So again, we've already plotted these just so we don't have to do it in the video, but around $17.40 is going to be a key support we're paying attention to, and going on to the resistance side, we're paying attention to $20.30. So those are the first two key levels that I'd be paying attention to. Then what we can do is push over to the standard deviation channels chart. On the left, we have a 6-month chart. On the right, we have a 1-year chart. Now, what I like with this, especially if we come down to the support side, is we can see not only does the option price low have a support there, but it does also match with our first deviation on the 6-month chart. So really, it's kind of two key levels and kind of two key reasons for us to potentially bounce. Again, we have come into this level before, we have bounced. So again, that is going to take away some of the strength. But we are definitely paying attention to that, and again, still potentially looking for another bounce if we come into that 1740. But again, considering we have hit this numerous times now, wouldn't be unlikely for us to break. I mean, if we do keep pushing to a support, the reason for that is sellers are trying to break it. So if we do eventually break it, then I'm paying attention to a $14.70 support, and if we break that, paying attention to basically $12 as a support. Obviously, we could continue lower, and we do have more levels for that. But I think for the time being, these would be the three key supports I'd be paying attention to as of right now. Now, if we go to the resistance side, what can we be paying attention to? So we do have statistical mean around $19.30. But really, considering where we're currently trading, I'm not really looking to take any trades within this range, because I think that's just a lot of more risk for no reason, really. So that statistical mean won't really make too much difference to me. But coming into the 2250, we got a 2390. And if we end up breaking quite a bit through that, then we do have around a 2780 level. And we'll quickly point out the 2850 because that's right above. So now if we break to the upside, obviously it's watching what happens at this around the $20.30. If we break that, if I'm holding this stock long or potentially looking at it short, again, I'll probably be looking to have no positions coming into around this 2250, and the reason for that is statistical mean is considered fair value on a stock. So really, I don't want to be touching a stock at this value. And really as well, I probably won't be holding it short coming into this level. And the reason for that is, again, this stock is one that's squeezed massively before. So I think taking it short, relatively near its pullback lows, again, it's just a lot of extra risk. So really, I would be ignoring the short level around the 2030. Obviously, statistical mean, I don't want any positions at this level. So again, if I'm long, I'm out of it completely coming into this level. And again, not really looking to open any shorts. Could potentially start looking at it short around the 2390. If I did take this, I would be taking small size for the reason being, again, we are still kind of now in the mid-range of the kind of breakout level. So really, if we start coming up to around the $28 levels, this is really where I'm looking at it more than short buys, because then we're coming at nearer the highs. We're going to get a much better risk to reward on it. And again, I think in general, we're just going to be taking on less risk in that trade. So really, that is the key things I would be focusing on. Again, if it comes to the support side, I think it's going to be an easy trade opportunity. If it comes to the upside, really, I'm just staying out until you would kind of consider it squeezing once again and kind of at those highs, and then looking to trade it that way. And again, the good thing with AI is, again, it does have the options. Obviously, we use the option pricings to find levels, but what it does mean is when it squeezes, we can either short the outright shares and hedge with calls, or we can just take outright option positions, which again, it's just going to limit that risk. And I always like doing that if we do trade these kind of squeezing stocks. I don't want to be holding just shares because, again, they move so volatile. It's just a lot of risk on the table, which if we can avoid, I'd much rather avoid. Anyway, that is the breakdown on AI. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.